Okay, good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, June 8th, and what a day it is. Lots of event risk on tap, lots to discuss. Good to be here with you this morning, guys. So, we got the ECB rate decision. There was no change, obviously, to the asset purchases or their plans for interest rates. In fact, what they did was remove some of that language that left the door open for further interest rate cuts, slight downward or softening of guidance for forward or moving forward. So we will go over. I see that the screen is flashing again, guys. Give me 1 sec. Let me see if I can get this fixed for you. Okay. Bear with me. I'm still trying to figure out why we're getting this flashing screen here, guys, but let me know if it gets too bad. The long story of it, we have that interest rate decision coming out. Looks like it's getting pretty bad here. And the euro still holding near-term support. Kind of frustrating for me. There was a nice turnaround that actually spiked on the release, but it continued to reverse. So we're kind of sitting at support now. I'm seeing your messages here regarding the screen. Guys, bear with me 1 moment. Sorry about this again. Okay, hopefully that'll do it. Sorry about that. So, guys, let's jump right in. On the docket for today, we'll go over the dollar index, euro dollar, sterling dollar. Obviously, we have the UK elections on tap. That voting is underway as we speak. Do keep in mind for the UK elections, it's going to trickle in slowly. And like I said, we're probably not going to get definitive results until later this afternoon, early evening in the US. So as far as what the impact will be on the sterling, you want to kind of trim your expectations with regards to any type of move based on the vote. That being said, sterling is still holding near-term resistance. Really nice turn, just ahead of that target we talked about last night in the intraday strategy or intraday update rather. So I'm still looking for a possible setback lower in sterling. We'll go over that. Aussie dollar is on the docket. Dollar yen with the rallying overnight coming to initial targets. We'll touch base on Kiwi. Obviously, dollar CAD and crude are on the docket still with that crude breakdown yesterday. And then we'll touch on nat gas and euro yen. Euro yen, I'm not sure who it was. Pete, was it you or someone here in the room who asked about it yesterday? Got me all interested in that piece. So I actually put out a piece on euro yen as well. We'll take a look at that. Pooja says, hey, Mike, I'm traveling tonight. Can we take a look at euro CAD, please? I'm short from 151.80. Pooja. I got you. Euro CAD. Took part profit at 151.60. I need to rush in 20 minutes. Thanks in advance. Yeah, I got you. We'll take a look at that right after euro dollar, okay? Hey, Gary, that was you, right? Yeah, euro yen looks good for that. The formation is still holding right now, so we'll take a look at that as well. All right, let's jump right into things. Lots to discuss. Mario Draghi, by the way, is on the wires. I'm watching some of the commentary come through right now. Again, I will keep you up to date if anything major comes through. But basically, it's all if things get worse, we'll react, and that's sort of the central bank theme that we've been walking with. So anyway, dollar index. Here's what it looked like on the daily. Here's what it looked like yesterday. As far as the index is concerned, the major critical area of support that we talked about, 96.47, is still the barrier or the floor rather, for the index. No surprise, we went over this yesterday, that the euro dollar is right at that resistance. So again, the inverse picture with largely broad piece of this index really comprised of the euro. Not too surprising to see that. That being said, 96.47, I extend that into 96.30s or so down here. Some of those slope lines still continues to be the major support for the dollar index. The major risk for the dollar crosses today, obviously, is going to be James Comey's testimony before the Intelligence Committee. So that's going to be starting at 10 a.m. Eastern. You know, my personal opinion's probably all smoke and mirrors, but largely speaking, if we do get anything material, a little more incriminating, whatever, you're likely to see the dollar really look for a test of this support, okay? Because that's kind of going to be the linchpin here for the markets. Note that yesterday when we got the prepared remarks from Comey, which got released, markets still rallied. Risk assets still closed higher. So is not really much that's spooking markets. We want to stay objective to what the market is saying, guys, not what the headlines are saying. So, you know, while everyone else is kind of running with this, the market really hasn't seen that much, hasn't really seen that much timidness on it, let's say. So largely speaking, it could be a non-event, guys. The social impact and all that and the media impact might be different. But the market effect may really be limited, okay? Intraday. Here's what the index looked like. I was looking at this near-term pattern, but at the end of the day, as I noted, the weekly opening range was taking shape right below the monthly open. So it's like you kind of need to just wait to see how that happens, how that range breaks. We've been talking about that range pretty much all week long, 97 into 96.47, 96.30. If we see that topside break, again, look for the parallel. Broader bearish invalidation still is right up at that same region that we talked about last week, 97.67, 97.87. Here's the intraday. Okay, so it looks like we're making a break of that. Again, I was really kind of reluctant to do anything until we broke the objective weekly opening range, and that's basically right here. So, you know, 97.31 initial target. Again, this is kind of your key region of resistance. Broader picture still remains weighted to the downside below this. If we were to pop 97.87, I'd be looking for a much more dramatic sort of recovery for the dollar before it turns over. But largely speaking, broader picture still remains weighted here. You're risking a little bit more of recovery. We've been talking about the divergence we've been getting in price action making a new low, the oscillator making a higher low. You have a trigger here on the daily chart. You had some divergence even in near-term price into that low. So certainly the immediate focus from a technical standpoint does leave further upside for the dollar heading into the U.S. Open. It's all about the Comey testimony at 10 a.m. So make sure you keep your eyes peeled. Any questions on the dollar index? I want to try to get to Euro and EuroCAD here for Pooja. Going once, going twice. Moving right along. Here's Euro. So what can I say? I got shook out of a short just earlier today. I kind of got a crap entry on it, and then I just took a couple of pips because it was stalling pretty hard on a 5-minute here. But kicking myself now. Long story short, we're right at the opening range lows for the week. This is also a nice pivot that we've been watching at 112.05 was the initial target we talked about earlier in the week on the update. Here's what the update looked like last night for Euro, and here's where we are right now. So again, we've been holding this nice ascending median line formation. So sweet. This has been holding for, over a month at this point. Here we are with a definitive bounce off a pivot we've been watching. Trendline support. Again, rejected at the monthly open, even on that rip that we saw in late trade yesterday in US, taking us back below the monthly open. And again, ECB, you saw the rip higher, again failure. And on the way down is when I tried to jump in with a stop against that swing. And I literally got executed at the low, and it sat there for a good 15, 20 minutes. So I kind of just jumped out at break even. But it looks like we're going to get the break here, 112.05. Watch that region. Ideal spot if we get a dollar rip, right, on Comey. In my humble opinion, I'm looking for 111.60. I know I've talked to you guys about that earlier in the week. That's this. So if we break the upper parallel, former upper parallel, former resistance should offer some support on the way down. Add to that this clear-cut pivot that we've seen in price, support, 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 break, saw acceleration, breach, saw acceleration, support again, converges on that same level. Add to that trend lines resistance or channel resistance. You took a parallel of that. It literally caught the low. We broke it, acceleration, saw support. That converges on the same region. So it would be sort of a nice spot to look for some sort of reaction. Sub 111.60, things look dangerous. Things look dangerous. Wouldn't try to fight it at that point. You're looking at like 111.20 at that point. You're looking at the median line down here at the 111 handle or just below. So this is sort of my line in the sand for maintaining that, you know, near-term constructive pattern on euro. Keep in mind, okay, why we turned a little bit bearish on the euro is because A, we were looking for a break of the weekly opening range, which we're testing now. B, we've been marking divergence into the highs, same type of deal as the dollar index. And C, with the dollar index at support and finally reaching or probing that key support region, wouldn't be outside the realm of possibility to see this thing give us a little bit more of a setback. Again, broader picture remains constructive, right? The euro with a really nice breakout here. So the question is, are we going to mark some sort of near-term correction from here? Or is this just a setback within the broader advance still? For me, it's 111.60 that's going to prove that. Okay, till that happens, immediate focus, in my humble opinion, is on a break of this support for that drop. Near-term resistance, look right here at the monthly open. That takes you into 112.40. And again, 112.85 is going to be the resistance barrier you need to pop to get resumption. In that case, you're looking for 13.40, 13.66 as just an initial target for euro. Questions on euro dollar. So with that mindset, Pooja, jumping into euro CAD, you're still here, right? Yeah, there you are. Jumping into euro CAD looks like this. It's 1, 2, euro CAD was 3. So I'm not sure, who was it on Twitter? Mike Friend, are you in the room here? Was asking yesterday, was asking me if I still had a bearish mindset as euro dollar was making its way into 52.20. And I said the same thing I said to all of you yesterday in the room. You know, 52.20 is my line in the sand. I am not trying to be long into 52.20. That's the level that I'm watching, and it continues to offer resistance. It offered resistance, though we saw a big reversal. And certainly this is the pitfalls of getting too reliant or being too, what's the word? You know, too rigid with candlestick formations and things of this nature. You know how many people kind of were screaming to all hell yesterday that this was a very bullish candle, and I agree. The reversal candle here was pretty, you know, ominous. When you get a long wick, reversal day to, well, it's not a reversal day, but it's an up day pushing right through after a really strong rip and break of the monthly opening range. Yeah, that is constructive, but price is king and resistance is resistance. And 52.20 was our line in the sand. We tagged 52.20, even climbed as high as 52.32, and then we closed lower. As long as the resistance holds, it's resistance. So Pooja, love the short. You got 51.88, not too bad. You got a nice range here to work with. So you got a little bit, you've taken a little bit off the table already. You're saying at 51.60, and you want to know the next target. So let's take a look here at where we stand. I just want to see what this looks like. Bear with me one sec. I think I did this with you in the webinar yesterday, but I do want to see if it offered anything. Probably work with something like that, which would probably put you at the 50 line right now. Let's see. Yeah. Okay. So this is what I would be looking at. And again, this is just because I like the concept of finally seeing some, you know, euro pullback here. My concern is the CAD, because crude has broken down, and if that translates to CAD weakness, it kind of might keep this thing afloat. So just keep that in mind, Pooja, as far as trying to trade this aggressively. What we're seeing in crude prices, that broke a big region of support yesterday. I even tweeted it out as soon as it broke. I didn't think it was going to break. You guys know what I was talking about with crude really being at a big support region. And we got a couple of nice bounces out of it, but it when it broke, it broke. And that's the exact definitive kind of price action you want to see to have conviction in your analysis. But looking at the near-term picture here for EuroCAD, I like where you trimmed off some of the short, maybe a little early, Pooja, but I'd be looking for a tag of the median line. Big spot for me is still 50-20. I know that's the 2016 open, but that's not the merits of why it's important. The merits of why it's important is just because of what we've seen price action do around that level. Very low tolerance level, I like to call it, where when price comes, it's either a definitive break and run, or it's a rebound and reversal. You don't get too much of this dilly-dally. Every time we broke, you saw it basically tag our next target. That comes in at 50-22. That converges on the median line we just added here. 1 touch, 2 touch, 3 touch, break saw acceleration, really nice reversal. Basically down here. So I'm not sure how long you're looking to hold that, but right now the immediate, I'd bring your stop down to 51.80, which is basically the monthly open. 51.77, Pooja, would be a decent region. You'd be locking in some profit, and kind of that'd be my line in the sand. If we broke back above that, I'd kind of be mindful of some sort of throw over or fake out again above 52.20. But I keep the focus lower, below that region. Does that make sense? And certainly some targets for you. $50.38, choke it up a little bit. No need in getting too zealous. Okay, that would be 2 equal legs off the high. See, the 618 comes in. It's 51.12, okay. And let me just compare that to a retracement of that near-term range. Yeah, I mean, you could see a little bit of a bounce here heading into the U.S. Open, Pooja. You could see a little bit of, I wouldn't be too surprised to see a little bit of a rebound here, but look for immediate resistance near 51.80. Pooja says, thanks, I'm going to leave my limits near 50.42 and then see it tomorrow morning. Amen. I mean, I do love that region. It's pretty big on a slope basis and just basic trendline support. I mean, even if you don't get too fancy with it, you know what I mean? Extending it off that low puts you at 50.40. Extending it off the actual swing low from April 26th, puts you at 50.20. So nice spot. And again, it's pretty well defined why we're looking lower. There's a lot stacked up here we were looking at. So your bearish invalidation level, the level of which if it breaks, you're probably going to see a stretch towards 53.70, which is a nice stretch up here into the 1618. Questions? You're more than welcome, Pooja. Sandy, I like your point here. I'm going to throw that out. Euro dollar, she says, for this week, I'm not sure we could short it as it opens bullish. We're already at Thursday. Not that there are rules. Sandy, I like where your head's at though. So typically on a opening range break, well, let me start out by saying this. I wouldn't necessarily say we started off the week bullish. I would say that we started off the week at resistance, right? On the Sunday update, we talked about the resistance level at 1285. So the entire trade is still constructive. It bounced already more than 4 times from the weekly pivot to the upside. Right. And that's still going to be the support structure at 1205. Right, Sandy? It's still there. So absolutely, the weekly range is still there. I don't necessarily am fighting the ability or the upside bias per se, but from an intraday standpoint, I think you can agree that the short side's been the better play this week. And that's what we focus on here, right? I'm not denying that this is obviously an uptrend. The broader picture still looks constructive any way you slice it. But the near-term focus, you started the week at resistance. You've been getting ongoing divergence into the highs, and certainly, that risk for playing the short side on the bounces is what I've been doing. That being said, you're still in the weekly opening range. You're still below resistance, and you still know your levels. 1285 pop puts you back on the constructive side. So Does that address what you're talking about? Agreed with that, says Horace. Sandy? I agree with you that we start off the week coming off a bullish week, but you don't just carry that over, right? And this week we're still within the range, so there's not really any reason to be bearish and there's not really any reason to be bullish. It's just that when you open the weekly opening range below resistance, within that range, I'd rather be playing the short side. So again, I told you guys earlier, I was in earlier in the week, there was a short that played out, took out 3/4 of it, a quarter of it gets stopped out at break even. Another one that I took off half of it, the other half got stopped out at break even as it rebounded back. And that's how I play the ranges. You know, I'm not taking any aggressive stance on a breakout of this range until we clear it. But within the confines of it, as I noted on Sunday, it's, you know, the short side's been the one I've been playing while within this range. I agree with that, though, says Sandy. She says there's better pairs with better ATRs. Yes, Euro Aussie is one of them. The Euro Yen trade we just talked about yesterday. Hell, even Euro CAD, bigger range, right? She says I'm selling sterling Kiwi without pulling my hair up. So there's always a pair of focus that we like. Speaking of sterling, let's move into the British pound. Any questions on the euro or the euro CAD at this point? Gary, we'll come back to, well, I guess we should just do euro yen right now. Here's what euro yen looks like, by the way, as Mario Draghi continues to speak. Says Draghi, ECB trusts strength, power of QE, change guidance as deflation risks absent. Says labor market is tightening, output gap is closing. Needs to be patient on inflation. Buying yourself a little more time here. He says the recovery comes with very strong job creation. The ECB has evidence many new jobs are low quality. So that gains that they're seeing in the labor markets, again, kind of on a interesting commentary there with regards to the quality of the gains. ECB didn't discuss when to announce QE further. Lack of core inflation, mostly due to subdued wages. And of course, we've heard comments that inflation continues to remain low because of strength in the euro, which is something they've been watching. Risks to growth are broadly balanced. Downside risks predominantly due to global factors. Okay, inflation to hover around current levels in the coming months. All fluff, all stuff we've heard before. So to look at euro yen with what we've been following there, yesterday, we probed below the 2017 open, the early open right here at 123.17, and then where we rebounded, was just insane. It was so clean, it was ridiculous. 122.67, guys, the 100% extension off the highs. It's the level we highlighted in the webinar, 2 equal legs. Gary, and then that parallel that we added as well. Look at that. That was just ridiculous. Even the embedded structure. So this is a nice little parallel here off the highs from May 9th, the subsequent low we made on the 18th, and the subsequent high that we made on June 1st. The near-term embedded slope is just off the highs that we made for the month of May. Boom, boom, boom. And you can see the median line convergence with that 100% extension charged a really nice rebound on building divergence. That's like, you don't get these too often when they're this clean. So there's a conviction reversal, in my opinion, or conviction long bias. First target, right back at 23.17. Second one was right here, and that's still what we're holding. Now, 23.97 was something I put on the piece yesterday. You did get that clip in overnight, or just now, actually, but it reversed pretty quick. So I'm not going to constitute that as a break, guys. You're still below resistance near term at 23.65, my humble opinion. Again, looking for support right back here. None of the levels have changed. The immediate upside for the euro here is at risk, and that kind of matches with what we're looking for as far as a possible pullback lower in euro. So we'll see, if this pans out. My concern is that I do think, Gary, dollar yen may have another leg higher. We flipped our near-term focus to the upside for dollar yen yesterday. It rallied into the first two targets. we'll take a look at that in a moment, right after a couple pairs. But that's my concern on this pair, is that if the yen pulls up a little higher, that's yen weakness. Well, euro weakness might keep this thing again some chop to lower sideways. Long story. Watch resistance right, unchanged from the levels that we talked about yesterday. So 2365, 2370, still near-term resistance, and downside targets are unchanged. If the yen does, by the way, let me take one step back. If the yen does give us that one leg higher and yen weakness is able to give us the pop, our bearish invalidation level that we noted was still 124.28. I'm still going to stick with that. Even if this were to pop higher, that might be a nice exhaustion level to try to short again. But if we make it past that, sayonara. Probably looking at broader continuation, but there's a lot to look at here for resistance. Does that make sense? Hey, Pooja, same to you. Says, thanks again. I will try to log in webinars next week, but I'm going to be away from the 20th to the end of the month. Happy pips to everyone in the room. Same to you, Pooja. We'll miss you in the room. Enjoy your time off. Gary says, great. Cheers, Mike. Hey, same to you, sir. Thanks for bringing this up. Again, I'm not really a big fan of the yen crosses in general. You guys know that. But when the setup is there, the setup is there. And again, that was a beautiful playoff off that base yesterday. So watch the open. Near-term resistance still 123.65/70. All right. So a little segue there for the euro crosses. That was euro yen. Number 4. Okay, number 5, pound. Elections are on tap. Again, polls are, pretty much solidifying that we're going to see that win for Theresa May. I mean, kind of backfired on her, I think, this whole revote thing a little bit. But in the end, the results, like I said, are not going to trickle until major a little bit later in the session. At the end of the day, guys, the technical setup is still super, super crystal clear. So here's where we were yesterday, okay? And I was noting that 129.82 level, that the long side bias is at risk into that region. You have slope resistance, the downslope that carried over from last month. By the way, there was a typo earlier in the week when I said that the slope carried from last night, obviously from last month. That's been corrected, but you had a nice convergence there with upslope resistance and near-term downslope resistance on a 764 retracement. You turned literally just pips ahead. So I'm liking the turn. The near-term pullback is back at slope support, okay? And a similar picture to the euro in that I would like to see a little bit more of a setback in pound, still in the broader uptrend, but near-term, obviously coming off of a basic resistance level. You have an outside outside reversal candle here on a 2-hour basis, and then the breakback below 29.42 is putting you right back at slope support. So, on this trade here, the immediate play, what would you do? I don't think you have one, guys. If you're not holding anything from here, I wouldn't do anything from these levels. If you're holding shorts, I'd take some off the table here and bring your stop back up past this swing high. It's 129.70. That would necessitate another break of the upper parallel and those swing highs, as well as the close high. And that would suggest, again, that you have sort of a breakout play at hand. That being said, I still think your focus range is right here. Your focus range right here, 128.80 into 129.80. With the risk still for, a little bit more of a move down lower again, like I said, to the monthly open, to the lower parallel, this region here. But if you look at this on a daily basis, it's pretty darn clean, right? Look at that median line. Support, resistance, whatever that is, resistance, pivot, resistance, support, support, support. Perfect tag of resistance. All right, so let's see how much whipsaw or how much whip pullback we got off this region here. 129.80 is still going to be your critical resistance for pound. Yeah, Sandy, we'll take a look at oil for sure. That's on the list. 100%. Yeah, we can't miss that today. So any questions on the pound? All things held constant, I don't think we're going to see that big of a reaction unless some sort of huge upset happens with the election, guys. That being said, it's pretty much baked in. Your focus is on price action. Okay, be mindful of the headlines, but for pound, I'm just going to be looking at price action here. Again, if we get the bounce in dollar and if we get dollar strength materializing, and I think that's what you should be looking at with pound dollar, is if we get that, if we get the dollar appreciating on the Comey results or whatever, that would be your mark for a pullback into 128.50, 128.80. But as far as the election is concerned, maybe seeing some trimmed positions. I see Sandy saying sterling's falling ahead of the election results. Yeah, I mean, it's not too surprising. Anyone who's been propping it up or anyone who's had that baked in, maybe exiting some positions here. But yeah, we're off resistance, Sandy. So yeah, what came first, the chicken or the egg, whether it's moving because of the election or whether it's moving because price is at resistance. This is the argument that the fundy and tech guys will make all day long. Questions on pound? Going once, twice, and sold. That was number 5. Really quick, Aussie dollar looks like this. Here's what Aussie looked like last night. We noted near-term resistance, 75.56 into 75.60, okay? A nice pivot in price. You got the highs that you made back here on the May open. You got the 100% extension off the highs. We talked about this in the webinar. Sandy had pointed out that we got some pivots up there as well. You had the 50 line or the current operative slope we've been following, which has been oh so accurate. That median line of that formation converges on 75.20, 75 17, and that's sort of what I noted last night as sort of my near-term focus is sort of a pullback here for Aussie. Again, an uptrend that is simply at resistance. So you don't want to be too aggressive on the shorts until you get a break of uptrend support, which we have not gotten yet. But certainly on a pullback here, the broader focus still remains way to the upside well above 76.70, basically 76.69. 50 line, really nice pivot in price. The monthly open from last month, 50% retracement. So immediate risk, look for the immediate focus is for a move on 75.20, 75.17. I'll look for a reaction there. You have to obviously breach 75.60. Look for the resumption of the broader uptrend. You'd be looking for 75.90 and 76.10 as just near-term targets. Keep in mind the daily chart. We talked about this yesterday too. There's a lot up here. A basic trend line, we've removed it from the intraday charts for sake of clarity, but a basic trend line, support, support, break, resistance, 100-day moving average, all converge. Look on the left, guys, right here. Okay, so you had a pretty big ceiling. Okay, to put it lightly, and for me, again, the kickback from here is just a near-term play within the broader uptrend that we're seeing. This is obviously a nice breakout. And one other thing I do want to note is that this being 100% extension, 2 equal legs off the low, is also going to be the tell once we finally clear it, if we do clear it. But near term, that's a pretty big ceiling in my humble opinion. Aussie dollar, questions? So-called risk pair. Might see some volatility today as we get into some of the more dollar intense event risk. Okay, finally, let's jump into dollar yen. Okay, so swing trades, you guys are we're still short on that front, right? Stops at 110.80, which is where my bearish invalidation level is. I was talking with Jamie about this yesterday. We talked in the webinar as this thing was coming right off of that slope, guys, and we noted a break above 109.57 would have put this thing constructive, and that's exactly what we got. We got that topside breach, came back, tested that range of support, held, went to the next target, which was 110.10. So, you could see another pop higher, which is what I was telling you earlier. Well, my problem, Gary, with euro yen is I think you could see that stop higher or pop higher into the weekly open is right here, 110.30. The 50% retracement and just the near-term decline is 110.40. So a 10 pip range here I highlighted last night. I still think that could hit. As a disclaimer, I'm not long anymore, but it could probe higher here on a, obviously have the Comey testimony in an hour. So if the dollar spikes, regions of which I would start to look for resistance, as I noted yesterday, 110.30.40, and then that's our bearish invalidation level. Even if it were a spike into that and come back, you're still looking at slope resistance. Yeah, we did a throw over earlier, but it's dollar yen, abomination standards. And you also have the 618 and the weekly opening range high to the pip. Okay, the weekly opening range high literally comes in at 110.72. So the levels are clear. Okay, yeah, sub 110.85, I'm still looking lower. Yeah, that was just the swing lows here, but a more definitive price pivot. But basically, you're looking for resistance initially at 110.40, and then if that blows through on Comey, if we clear 110.72, 110.85, it's, I don't want to be anywhere near short side on dollar yen at that point. But if you're looking for fresh short exposure, the closer you get to 110.72, the more I'll have an itchy trigger finger to try to fade it. It depends how it happens. You know what I mean? If it blows through, guys, and dollar is just seeing broad strength, stand aside. You don't want to be the guy trying to catch a falling knife. Or in this case, I don't know, holding a balloon underwater, I guess, right? But, if we do see a reaction where it's just really sudden and it pulls right back, look for that second spout to take the short against the high and see if you can play the pullback because, broadly speaking, we're still in this downtrend. It's just that you had divergence into slope support. Looking at the daily charts to give you a recap of kind of where we are there, right? Well, first of all, here's what we looked like last night on dollar yen, right? There was the initial target at 110.10, 110.40. Okay, that's the level I just noted, and then that key region up there. So we came back, we tested this as support, and then we rocketed through. So we're trying to see if we can stretch into that, next topside target. After basically getting hung up on that 38.2. But to look at it on the daily charts, what I want to show you is slope resistance, that secondary high that we made after the first fall, which was back on January 19th. Kind of messy, but perfect resistance, breaks all acceleration, perfect support. So initially, I thought we were going to be a little bit more rigid on that support bounce there. Obviously, the slope line's caught more so than this retracement. If you bring this into a 786, it actually does catch a little bit better. But, you're basically looking at this thing to play the rebound to see if we can cap that rebound while below 110.50. All right, questions on dollar yen. Dollar yen alert sent short this morning, says Sandy. Yeah, I think, again, the automated system is going to do what it's going to do, okay? And we're still watching that. And we're still liking the short side, broadly speaking, Sandy. Doesn't mean this thing can't pop up another 20 pips into the U.S. Open because of the event risk. And guys, that's one thing I always want to keep in mind. The alerts are our interpretation of what's happening in price. But as I always say, when these event risks come out, make sure you have that mindset that the market can react suddenly, and all these alerts and anything technical, you need to kind of put on the side, okay? When we see an event risk and a sudden knee-jerk reaction, it's not necessarily going to invalidate our broader bias, but near term could really charge an adverse move. So I just wanted to put that out there. Even if we get a spike into this region on Comey, you're still looking for resistance. You're still looking for the possibility to short this. So I do like the short bias still, Sandy. I'm looking for an exhaustion high to sell. Make sense? All right, that is British pound, or excuse me, dollar yen. I don't know where my head's at there. And next up, Kiwi dollar, number 8. Here's what Kiwi looks like. So take it back to the previous update on Kiwi dollar. Here's what we were looking at. Okay, so the daily chart, 72.30. There's really no change to this. I don't want to spend too much time on it. I haven't been playing the long side for the Kiwi. I've been waiting for a stretch into 72.30. Try to see if we can find some resistance. Even as a near-term trader, I can't get myself to get long after this kind of stretch. To open the month, we already had a 4% rally off the lows. And I recognize, and we talked about the critical nature of this support and where we turned. 2016 open, trendline support off the 2015 lows. It was a perfect rebound, and we cleared, the previous March range high. I get it, but the upside now is starting to get a little tired. Momentum isn't overbought, so I don't necessarily want to fight it. We've been getting a divergence into the start of this week as we made higher highs in price, but structurally, I'm looking for the upper parallel here. That's 618. It's just such a beautiful confluence. It even carries over into tomorrow. And do keep in mind that, well, I'll come back to this. But anyway, 72.30, big region. You also have the close highs from back here in February. Okay, some swing highs here back in December of last year. Some swing lows. So it's a big, big pivot in price, upper parallel, Fibonacci considerations. 72.30 is what I'm looking at. We haven't quite hit it. I don't want to be a stickler for it. If we see dollar's strength start to materialize, a pair I think could see a little bit more of a washout to the downside. It's just been a radical trade. It's just been, like I said, there's nowhere to get in on the long side. This was your best bet last week. This was your best bet this week against that low. Other than that, I don't, even on that pullback, I didn't even have anything here as a support structure for me to try to get long. So look to see if this thing finds some resistance. And if the dollar does correct, I think this is a nice one that I'd like to play on the downside as some people try to exit that long. A break to the upside, basically 72.80 is your next level of focus. That is a basic trend line extending off the highs from 2016, right around here. Near-term support on a break back below, former trendline resistance or former upper parallel. So here's the formation we were following all through the ascent. Median line support, median line support, median line support. There's the 50 line as support. That comes in with the initial weekly opening range right around 71.50. So if we break back below the 72 handle, you got a 50 pip range to the downside of which you start to look before you even start to see any structural support for Kiwi. So looking for shorts into 72.30. If we get a pullback, 71.50 is initial, downside. You look for bullish invalidation still at 72.30, and if you break, you got a nice 50 pip range, 60 pip range up into that 72.85, 72.90 level, where you start to look for some more basic trendline resistance. Questions on Kiwi dollar? Getting juicy. Maybe get a play here for Kiwi. See if we can't get one in. Hey, Pete, same to you, sir. Have a great weekend. All right. Now let's talk about, if there are any other questions on Kiwi dollar, feel free to throw them out. Now we're getting to the juicy stuff as far as crude and dollar CAD. So I'll cover, let's just jump into crude prices first because it's going to make so many headlines. And as I was speaking in the webinar yesterday, and even after it happened, the break, in my humble opinion, back below 47 on a closed basis is pretty huge. It's pretty huge. The actual range was 46.45 into 46.88. This is the region we talked about into this close of last week, into the start of this week. You had 100% extension off the high, so if it was correctionary, or corrective in nature, this is where you'd want to see a hold. It had the 618 retracement off the lows, which coincided with a swing high in price. So it's a really nice support range. You had the median line, the descending pattern, running right through it. Okay, and you can see that right there on the daily chart. So that being said, objective price action, weekly open, sets a high, sets a low on a Monday, Tuesday stretch, tests the low, it holds, tests the high, it holds. A break of the weekly opening range, shifts the focus lower, looking for a late week low. Well, it's Thursday. Still got a day of still got a day left on the week. Wouldn't be surprised if we see it move lower towards this confluence region here. It's basically like 44.30 or so. And you got to stay bearish below 46.88 right now. Bottom line. Bottom line. It was a big break from a structural standpoint. So look, the immediate downside bias heading into the session, you might see a recovery, but even if you do, like I said, 46.88 is still what you got to stay bearish below objectively your weekly opening range low. The top side of that support range that we were looking for should offer resistance. Downside 44.33, just that confluence region. So here, whoops, this. Let me see where the 1618 comes in. Just a little bit lower, 44.10. Okay, into 44.30, let's call it. Let's give ourselves a 20 cent range there. And then the low comes in at 43.77. Your first Fibonacci sequence doesn't come until 43, basically. Again, this is way moving forward. Immediate focus remains lower, sub 46.88. Immediate support. I don't really have anything till down here. Questions on crude prices? Hourly reversal support comes in at 44.30 as well. Really close? 44.31. Wow. All right. Even better. So hourly reversal close, 41.31 right there. Opens up that exact range that we're looking at for the possibility of some downside targets here in crude. By the way, further helped if we do get a bounce in the dollar, right? Further helped. Priced in dollars, usually when we see a dollar rally, tend to put a little bit of a damper here on crude prices. Crude just getting a little support at trend off 2016 low and 2017 May low. So let me see what you're looking at here, Mark. I see what you're looking at. I tend not to put too much emphasis on this because we're not really, well, let me just draw it in first. See what we're looking at there. I tend not to put too much emphasis on these 2-point reference trend lines. Remember, like I always say, 2 points is speculative, right? 3 points is confirmed because any two highs in price action can make a trend line. You don't really know if there's merit to it. So this is the initial test. So yeah, initially, maybe. You're absolutely right. We could see a rebound there. And if it does, it would certainly confirm the validity of that price or of that slope. But as it stands right now, I really wouldn't necessarily, put too much emphasis or too much credence to that slope until we get some sort of reaction off it. At the end of the day, the break, is a pretty big break here. So for me, the downside still pretty heavy. Sandy's got a nice short from 40. From 49. I was going to say, Sandy, $40. How long have you been holding that short for? From 49. Beautiful entry. Your target is 44.30. And I absolutely love it. Yeah, absolutely love it. Maybe look at price action as we head into the upper part of that region, dependent on time. It might be just above. I'd hate to see you lose it for a couple of cents, but I love this region. Love it. See if we can't get that stretch. Oops. Why does it keep doing that? Hold on. Sorry, guys. I'm just trying to see, I'm just trying to make a parallel of this line. I just want to extend it off that low. Just keep an eye on that as well. All right. So crude, a little bit more downside to go in my opinion. Even if we rebound or you do see some sort of bounce, you're seeing some divergence here. It's in way oversold territory, so I don't want to use that divergence as justification to play the reversal. But just noting it, if you're holding shorts, again, you're still looking lower below, well, immediate resistance. I would not really focus on that 786, but more so this swing low, so like 45.66. As near-term resistance, but still looking lower here in crude, broadly speaking, on that break after yesterday's move. Translate that to dollar CAD, and here's where the problem arises. So we favored a dollar CAD break of this support, key support. 2017 open came in at 34.35. It converged perfectly, and here's a perfect example, Mark. Three-point touch, right? 1, 2, 3. That gave us a little bit more conviction on this being a operative, slope. Obviously, the resistance this week was, or this month was ridiculous. Outside reversal day right off. That median line is really what shifted our focus lower. But support held. And yesterday you posted an outside day reversal right off support. That's typically bullish. So I don't really know what to do with dollar CAD, and with crude prices basically breaking a big support structure, that's not going to add fuel to CAD strength, which is what you would need to see the downside break. So I'm kind of the mindset of, watch, you still have to respect the monthly opening range here. It's only the 8th. We came off resistance to start the month. The monthly opening range low is off support, critical support barrier. So for me, I've gone neutral a little bit here on dollar CAD. And I think you got to wait for more definitive dollar price action to get this thing going because CAD ain't helping. Now, with that said, tomorrow we do have the release of CAD employment data, and that could be the catalyst, especially once we clear out some of this Comey crap. Once we get into the latter part of the week, we do get that data print stoking some CAD weakness. 135.75 is the next upside barrier, which I may be interested in possibly looking for some resistance, some short entries. Until that happens, guys, the near-term picture looks like this. And here's what we were looking at, by the way, for dollar CAD. Earlier in the week. Okay, so there's where we were basically into the start of the Sunday trade. And we wanted to stay with a little bit more of a bearish bias below that 35.22 level. So 35 held as resistance. We did get a move down into 35.70, and we even got a move down into our initial target or our bigger support barrier here at 34.27 into 34.44. That's what exactly caught the low, literally. Now it happens again. Like we said, yesterday was a big old reversal off support. It took us right back into slope resistance right here. 35.22, literally. It's no longer a 618, obviously. We were measuring the 618 of that range, but that's exactly where we capped out this advance. So look, at the end of the day, I'm kind of going to look to stay a little bit more neutral here. You're right back at the weekly open, so essentially it's a wash. The market did nothing this week. We're unchanged on dollar CAD. Even though crude prices broke a big support barrier. So I'm going to look for dollar to drive from here. Crude ain't helping. CAD strength, I don't think is going to be the game plan unless we get into tomorrow's employment data and you see that stoke CAD strength, look for the dollar to drive. Okay. Any questions here on CAD? I wish I had more definitive price action, more definitive bias, but it's tough. It's tough from here. I'd be interested in, again, selling a rally towards this region here if we were to get up there on the daily chart. but for me, this was pretty definitive. It doesn't look like I want to, short into this region from here. I'd either need to see a break below 35.20 or a breach above basically this region to play resumption. Other than that, you're inside a pretty critical range between 35.40 and 34.40. Sandy says 40. Oh, you're talking about crude. Awesome. Even more so. Crude, by the way, guys, 44.30 is the weekly S1 pivot and monthly S1 pivot. And typically when you get the monthly and weekly pivots converging on the technical factors we've been looking at, further conviction, further confirmation of the validity of that level. Cheers. Questions on crude or dollar CAD? So crude was number 9. Dollar CAD was number 10. Nat gas. Different a picture in nat gas than crude. Has been doing its own thing. Here's what natty looks like. And obviously, this is a trade that also we've been following. Just wanted to highlight, again, that move off of support was pretty sweet. It was pretty sweet. We highlighted 291 earlier in the week. Here's what nat gas, the latest update from 6.6 looked like. We talked about that reversal off resistance, support, 291. Nice confluence region of the lower parallel in the 1618 extension. The rally, look where we capped out yesterday. And this is what I really wanted to kind of like focus on today. Basic trendline support. Boom, boom. Now we saw a break early in the year in February. But look what happened on both sides of the coin. And this is where, again, yesterday we talked briefly about this, but this is where you decide, do I want to keep this trend line operative or do I want to get rid of the noise and clear my chart a little bit? When we broke, the underbelly of it was perfect resistance. Resistance. When we finally closed above it, the next day saw acceleration. That means I want to keep that line, right? That trend line may have, that slope may still be something that the market's watching. Heading on the way down. Once we got that close, again, we slipped lower. Look where resistance was yesterday. Boom. So if we mount this region again, and this is why I have 306 as the line in the sand, because that's going to be my conviction for, okay, we're finally going to, this would be a conviction, a way of validating that we've in fact cleared this trend line again. And that's because we have the 200-day moving average, the 100-day moving average, the 38.2 retracement, and the monthly opening range high comes in just lower at 304, all stacked up here. So guys, if we clear 306, 304, 304, 306, I should say, it's constructive, period. I do not want to fight the nat gas rally. Do I see that materializing? I don't know. Resistance is made, typically when you're heading into resistance, the assumption is that it holds. Typically when you're heading into support, the assumption is that it holds. So right now, yeah, I do think we could see another stretch higher despite this outside reversal off resistance into that region. But that's going to be my near-term bearish invalidation level. As long as you stay sub 304, 306, I do want to look lower. Questions in nat gas prices. Here's what the near-term picture looks like. Again, from earlier in the week, no change to any of those levels really. So you're looking for an initial resistance still at the monthly open, that 38.2, basically the 3 handle. And as long as you stay below 306, you're looking for to fade strength, basically, even if we pop higher through that, which again, I think you might get that pop. Either way, I'm looking to fade strength here. 291, 286, downside targets unchanged. But it's a big support barrier, so I wouldn't be surprised to see us go for a test here of that major resistance before moving lower. And if you're looking for volatility, the event risk is here, at least from the dollar side. That could move here prices in nat gas. Questions on crude or nat gas here? All right, and that takes me through everything on my list. I think I've hit everything on your list. Sandy, Sterling Key, was that a question that you had on? I'm sorry, did I miss that? Watch the 100-day moving average as near-term support. I briefly looked at this earlier in the week. And the entire stretch off the low from November of last year, the 50% retracement comes in at 78.30. The yearly open at 77.97. So either way, if you're playing the short side of Sterling based on Kiwi strength, or whether you're looking to play the Sterling pullback, this is a region of which I would still be very cautious holding shorts into. Sandy says Kiwi strength. Okay, yeah. So again, Kiwi dollar, keep in mind a couple of things. I mean, you're on the right trade, obviously. Kiwi dollar, yeah, like that stretch into 72.30. So it's a little bit more upside to go. Watch that structural resistance. That could push Sterling Key lower, specifically because Sterling is coming off of resistance as well. But I wouldn't be, again, I wouldn't be too aggressive on anything into 78.30 or 78. That's kind of where my line in the sand is, where I'd look to clean up any short exposure that you have. I would also note that you're seeing some divergence here on the near-term charts with the lows that you've been making. Daily, I wouldn't really worry about that momentum signature too much, but isn't all that awe-inspiring at this point. So beautiful trade. If we close at these levels, Sandy, you're making an outside day reversal at the lows, an outside day bearish reversal at the lows. A lot of times that could be exhaustion. If this was happening at the highs, an outside day reversal to the downside at the high, it'd be a beautiful short signal. But as the materializes at the lows into longer term moving average, which has awfully offered a decent pivot in price, I would just be cautious about that. Now that Kiwi's at resistance, I would go out soon, says Sandy. Right. Cheers. We're on the same page with that. Great. Amen. All right. That covers everything on my front. Graham says, thanks, Mike. Off to vote now. Just hope that the next UK government keeps its hands off tax-free FX spread bet trading for the UK residents. For the sake of the market, so do I, Graham. Cheers. Go do your civic duty, my friend. And best of luck to everyone here in the room. Stay nimble. 10 o'clock, less than half an hour. Comey's going to take center stage, and you better believe the headlines will be flying. So keep your trade size nimble until we get through all this. Again, the opening ranges for the month are just opening up, guys. And best of luck trading to the close of the week. Don't forget CAD employment data tomorrow morning at 8:30. I will tweet that out on SB Squawk. And I will see you guys on the free session, again on Monday morning on Daily FX, and right back here on SB Tuesday, Wednesday, and Thursday for some more intraday webinars. I'll see you then. Best of luck trading. Have a great weekend, guys. Cheers.